Hi, this is Andy Filipiuk in Toronto for the week of March the 9th. I'm doing this video on March 10th, one day after the massive sell-off we saw. The markets go down 8% on the Dow. We saw oil drop over 20% all in one day. It was just unbelievable to see the sell-off going on in risk assets. Now, just for starters here, the price of oil is now down 49% year to date. We have the Dow off 16.4% and the TSX down 15% year to date. Now, I'm happy to report that my Canadian permanent portfolio is essentially flat on the year because the price of gold is up 10% and the Canadian dollar is now down close to 5%. So we're breaking even in a very, very difficult market. And it's worth pointing out here that this sell-off could continue as world events are now taking over and the potency of the central banks is seriously being questioned. I mean, in essence, this problem started last fall with the repo crisis where markets needed more liquidity. With the coronavirus, we've seen a sharp slowdown in economic growth. Now, this has caused these OPEC people to try to cut supply, but the Russians and the Saudis couldn't agree, so the Saudis have just flooded the market. And to see oil drop as sharply as it did yesterday is very troubling. This is going to affect the Permian Basin. All oil and gas companies are going to see a sharp decline potentially in their cash flow. And this is going to put stress on governments too, as their tax revenues will come off quite a bit. Now, I want to make sure that everybody understands here that no matter what central banks or policymakers do, it's out of their hands. The economy of the globe is now driving prices. Now, in the last crisis 12 years ago, they were able to cut rates and do the quantitative easing. And what this did is it basically cut rates to zero, forced everybody into risk assets, whether it was stocks, high-risk bonds, preferreds, etc. And this game lasted a long time. So taking risk was rewarded handsomely over this period. But they could seriously be losing control of the system here. The markets are pricing in basically 0% interest rates going forward, and politicians will try to come up with fiscal plans and the central bank will come up with new plans. But the bottom line is they're not going to be able to stop this because they cannot get money into the real economy and force people to transact just because they're cutting rates. So this is a real warning for anybody in risk assets to have a plan in place. And this is why I'm very happy about the Canadian permanent portfolio, because markets are moving so fast you can't even react. So you have to have a strategy and a theory in place. This could get uglier as we go, but wanted to update and glad that we're hedged properly here and not losing capital in a very, very dangerous time. Thanks for watching.